and supply. Talk about digital gold. Use the image of a gold coin with a B on it. Keep pushing this idea that it's like gold. To create a real bubble and to inflate Bitcoin. And what they're saying is you inflate Bitcoin so that you get more interest in stable coins, because 85% of stable coins are collateralized by U.S. treasuries. It's a way to get U.S. treasuries purchased, to swap up or mop up those otherwise unwanted IOUs from Uncle Sam. So if you create a Bitcoin hysteria and that translates into a stablecoin momentum, that's one other way for the government to find some other buyer, stablecoin buyers of otherwise unloved IOUs or U.S. treasuries. It's just another way to postpone this debt nightmare we're in. Is that right or wrong? I don't know. It's a theory that I have to at least take more seriously now. That makes sense. And that goes again to the irony of the Bitcoin narrative years ago, is we don't want to have anything to do with governments and banks and centralization. But in a way, as I've said, this quote-unquote tulip was a speculation tulip. Now it's becoming a very politicized tulip. And if you can use Bitcoin as entry drug, so to speak, to stablecoins and create a better momentum and narrative for stablecoins, that actually helps the U.S. government a lot. I don't think it's a coincidence now that we're talking about this Bitcoin reserve, strategic reserve account, and we're talking about this Loomis bill, and that Bitcoin's ripping. And again, that's not to say you're an idiot if you're buying Bitcoin. I'm not saying that. I'm not criticizing Bitcoin. I'm saying let's stop calling it digital gold. Let's stop calling it money, and let's stop pretending it's going to be money. It may be. Certainly isn't today. It certainly wasn't yesterday. I don't see even stockpiling it as money. I see it actually as an act of desperation now that we're talking about stockpiling a Bitcoin account in the U.S. Loomis wants to sell gold to buy more Bitcoin. To me, that is the ultimate sign that the shoe salesman, or the shoe shine boy tells you to buy a stock. You know things are crazy. But with political weight behind it and Trump momentum behind it, it's going to go up in price, certainly in the short term. And certainly if we're going to cut rates and we're going to have inflation, it's going to follow that narrative as well. If you look at Bitcoin, it's really just a XXX levered NASDAQ index. It's a speculation. It's a tech stock. It's got a great narrative of alternative fiat. It's got a great narrative with its digital gold. It's brilliantly exploited. And it's not even the poor man's gold. It's the speculator's gold now. And they've used the stable monetary history of gold to they've hijacked that, put it into the Bitcoin narrative. It is to some a pyramid scheme, to others it's just a speculation asset. To the diehards, it's the new money in the next 20 years. There's a world going digital. Again, we can spend hours on this. I think what Andy and I'd like to do is really have a good discussion with the Bitcoin camp without attacking each other. But yeah, short answer, or long answer to a short question. Bitcoin has a lot of political momentum, a lot of market momentum, a lot of tech momentum. It has interest rate momentum. It has inflation momentum. Yes, it's ripping. It's not a surprise, and it could go much higher. But again, be careful about your exit and entry ramps on this speculation asset. And as someone who came into Wall Street as the beneficiary of a pre-IPO that went ridiculously over its ease and value. I made a ridiculous lottery ticket win on a couple stocks during the dot-com bubble. But even then, I knew it was a speculation bubble, not brilliance, not the new normal, that tech was going to save the world. And I don't think Bitcoin is going to become new money. But I think the narrative right now is sticking hard, and it's going to do well until it doesn't. Egon cryptically says it can go to a million or it can go to zero. He's half jesting, but in truth, there's a lot of truth to that. It's certainly more sexy to millennials and to younger people trying to acquire wealth rather than to preserve wealth. I understand that. For me, gold, yes, it has price action that can be very good optionality and speculation. But like you and most people who really buy gold for the long term and not own it and don't rent it on an ETF, but actually own physical gold, we're thinking 10, 15, 20 years out. We're buying gold because we want to preserve our wealth. Yes, we'd like to see it go up in price, but we know it holds its value far better than any paper money. And so Bitcoin is getting the benefit of that narrative, but it really isn't a store of value. It can rip, but it can also crash. I don't see it crashing anytime soon right now. It would be very interesting to see what happens in the next couple of years with the politicization and the centralization of this once apolitical, decentralized, unique asset. It's becoming more and more mainstream, but I do think it's going to be used as an entry drug for stablecoins, and I think stablecoins are going to be used as one more trick for a desperate government to get somebody to buy their U.S. treasuries other than the Fed. And so it's a very complicated but also very simple thing. But yeah, I have a bias. I could be wrong. I'm not against Bitcoin speculation. I do not think, though, it is new money, and I do not think it is a store of value by its own mathematical profile. Not at all.
You mentioned how possibly stable coins could kind of kick the can down the road. So your view kind of is that the U.S. government could then use those, back them by U.S. dollars, and then sell more U.S.
This one's okay. Ain't no bullshit. I've been meaning to upload this big tire horse for a while now. Unruly bastard. Where'd you get it? Some big loudmouth bastard tried to rob me. I was out riding, so you know how these hustlers. Let's take him to Valentine. It's on the way. So there's a decent dealer there. We'll unload him and you can buy yourself a new horse. Put your saddle on him. Let's get going.
U.S. dollars, U.S. Treasuries that way?
Yeah, well, Tether and some of these stablecoins are highly involved with U.S. Treasuries. That's what's behind them. It's a backdoor way of getting some other source of demand for otherwise unloved U.S. Treasuries. And again, we always talk about QE to the moon and extreme QE, and we've brought the Fed's balance sheet down. So we're QTing for the last year and a half or so, and the Fed's trying to tighten and do the right thing. But what people don't realize is that that's real QE, that's direct QE. But for the last 4 years, we've been doing indirect QE, whether it's Yellen issuing from the short end of the yield curve to take pressure up the long end, whether it's emptying out the Treasury General account, whether it's the reverse repo market, whether it's this new attempt, I think it will become real very soon, to get exemption from supplementary leverage ratios, which is a wonky Wall Street term, which just means that the too big to fail banks can float interest and buy treasuries off the balance sheet of the Fed themselves, hold them and get a reward for it. So that's really the too big to fail banks doing QE for the Fed. So there's all these different ways we're creating liquidity or QE-like liquidity measures to save our bond market. And eventually, I think it will just be the direct red button at the Eccles building, just start printing. I think the only reason Powell cut the balance sheet from 9 to 7 trillion was so he'd have something to fatten when the recession becomes official. I think the only reason he was raising rates from 0 to 5% plus was there something to lower when the recession becomes official. I think it was just trying to reload the only two guns he has: control the money supply and control the balance sheet and control the price or the interest rate. Eventually, I think the bond market gets the last laugh on yields and interest rates, not the Fed. And eventually, even with stable coins swamping up or mopping up some of this or sponging up some of these treasuries, the world's dumping treasuries. China, Japan dumping treasuries, usually to buy energy, to buy oil. They're dumping treasuries because it's a weaponized dollar post-Ukraine. They're dumping treasuries because America has too much debt. They don't trust the issuance. They don't trust this IOU like they used to. So there is a real bond crisis, sovereign bond crisis globally, but in the U.S. in particular. And you understand the bond market. You understand everything else, in my opinion. And the fact is, we need someone to buy our debt, because whoever's in office, we're going to be issuing more debt. We're going to be spending more than we bring in tax receipts and GDP. So we float that delta with IOUs. The world used to trust them. Post-2022, they don't as much, hence the BRICS rise. Our debt levels have just gone astronomical, so we're an issuer from a poor credit of an asset that's declining in value. So this bond market is essential to save. And throughout history, going back to ancient Rome, it's said many times, pick your spot on the calendar or the map, whether it was Yugoslavia in the 90s, France in the 1800s. Obviously, the U.S. today, you have to choose, just like in Japan, between your bond market and your currency. What are you going to let die? It's not going to be your bond market. You survive off debt and credit and IOUs. So you sacrifice your currency, you debase it, you overproduce it, you overcreate it, and you bring interest rates to the floor to make it even more debased and cheap so that you can float more of your debt and create more debt. And that debt just postpones the inevitable destruction of so many things, including the purchasing power of your currency, which is all tied to gold and inflation. But yeah, I think it's absolutely essential right now to save the bond market, and they'll do that by debasing the currency. And the DXY right now is gone higher since Trump. By the way, it went higher too when he was elected in 2016. And it's interesting that the DXY is going higher as the Fed, and by the way, even yields are going higher as the Fed is cutting the Fed funds rate. It's a very interesting time. But for those who want to think back, Bush, when he was elected in 2001, the DXY went from 108 to like 120 or 121 as Greenspan was furiously cutting rates. So the Fed doesn't always have control of the direction of the dollar. And right now you're seeing this kind of Trump tailwind, this strength in the DXY and the dollar. And I think on a relative basis, absolutely, the U.S. dollar is the best horse in the glue factory. I've said many times, if I was an American in Argentina or in Istanbul, I'd much prefer a dollar to a lira or a peso. But in isolation, the purchasing power of that dollar, regardless of its relative strength on the Dixie, is getting eaten alive every day because of invisible inflation and actual inflation. And I think under Trump, his campaign promises to kill inflation. There's a lot of things I like about Trump's campaigns and a lot of things about his ideas that I like, but I don't think Trump is going to kill inflation. He wants a weaker dollar. He talked about it. Hell, even Harris wanted a weaker dollar. I think his Treasury Secretary wants a weaker dollar. Yellen and Jake Sullivan want a weaker dollar. We need a weaker dollar. And so that is going to be inflationary. And we could talk about Trump's other ideas too, which I think are going to be inflationary. If I was his advisor, I would tell him, I would have kept off on the inflation thing, but I would talk about the other things he wants to do, but I wouldn't have promised no inflation. That reminds me of the other Bush president, read my lips, no more taxes. That was an iconic moment, and of course that cost him the election because he had to raise taxes. And I think in a similar vein, Trump's going to have to inflate or die, and I think we're going to need more inflation. I don't see any way around it. That doesn't mean we can't have disinflationary forces like a market mean reversion or recession, but it's in our best interest to have a weaker dollar. And yet these policies like tariffs, reshoring of American jobs, which, you know, you can argue pro or con. I certainly am in favor of reshoring American jobs in manufacturing. And even these mass deportations, these are going to be expensive. They're going to be inflationary. And so again, a lot of things you can like about these promises, but in terms of the dollar, I think the trading range for DXY, like Gumlac, is somewhere between 100 and 110. I don't see it going to 150 or 70. I see the dollar getting a boost right now, but I think ultimately, in isolation, the purchasing power of that dollar is just going to be debased because that's how you inflate your way out of a debt crisis. It's what anyone would do. It's what he has to do.
You've mentioned in your recent article that, right, the Trump administration will likely bring about a weaker dollar and more inflation. Interestingly enough, a repricing of the U.S. dollar is exactly what the BRICS nations want as well. So can you expand on that, how it seems like now kind of the whole world is on the same side, and that's the side of inflation for the U.S. dollar?
Yeah, well, every major country is basically, it's in a race to the bottom for their currencies. When the Fed cuts rates, they cut rates. When the Fed raises rates, they're all chasing the dollar and the Fed. It's, you know, even the Bank of England eventually. But so I'm saying, the world needs a weaker dollar for a number of reasons. They need lower yields. They need lower rates for a reason because, well, again, $13 trillion in global debt is dollar denominated. That doesn't mean they owe $13 trillion to U.S. banks, but a lot of debt is floated in the Eurodollar markets, in the European markets, in the U.S. markets in dollar denominated terms. If the dollar gets too strong, that's harder in your local currency to pay back your debt. So you have to debase your currency even more to pay back those dollar denominated debt. So the world needs a weaker dollar. They don't need the dollar replaced. They don't need America destroyed. They don't need the world reserve currency gone. They need it repriced. And so does Uncle Sam. That's the famous fiscal dominance argument. When your interest rates get too high, your cost of debt gets too high, you need a weaker dollar to pay for it. You need lower rates to pay for it. And so by raising rates with the Powell policy, the higher for longer, that was ironically an inflationary policy because eventually the debt cost got so high that you had to debase your currency to pay that debt. So Uncle Sam can't afford high rates and a strong dollar. The rest of the world can't afford high rates and a strong dollar. So there's a mutually determined path to try and see the dollar weaker. But to Brent Johnson's point, there's such a demand for that dollar at the same time in the derivative markets, in the SWIFT system, and currently still a little bit in the petrodollar system, that can push the dollar higher. And its relative strength still matters to the rest of the world. And it's a very, very fine line between the sublime and the ridiculous with this dollar argument. But ultimately, Trump, and he said it, and he wants it, a weaker dollar. But that, by the way, is also inflationary. And trying to get the Fed to push interest rates down, which I'm sure he's going to push for, directly or indirectly, is also inflationary. So I think there is a little bit of a disconnect, in my opinion, between Trump's otherwise powerful statements and hopeful statements and his promises on inflation. I think the only thing that could bring inflation down would be a really bad recession, or a mean reversion of the markets, but that would be deflationary. But we're going to still support those problems. We're going to address those problems with a solution that would be mouse click money and hence inflationary. So the end game will always be inflationary. We'll cross the Rubicon of 125% debt to GDP. There's no way to grow our way out of this. I think Trump's plans to reshore jobs and to focus on manufacturing is absolutely spot on. That's going to take more than 4 years to do. It's going to cost a lot of money. It's going to cost a lot of spending. It's going to be inflationary. And I think, I applaud reshoring, but I don't know if we're going to be able to do that without inflation. I just don't see how, personally.
And this then seems to be all good for gold. I know Egon von Greyers recently wrote an article, and it's just, the first line is kind of makes the point the case for gold is incontrovertible. Your perspective on that?
Again, I totally, obviously, you gotta agree on just about everything, but anyone who really tracks gold as a long-term investment understands the historical risk and the political risk and the currency risk that goes with it. And it's not as if we're so high conviction on gold because gold gets shinier or suddenly gold